Okay, Monday, March 14th, 2011. Had a few requests for financial updates. My whole channel was started because of my visibility by combining spiritual with the secular. Basically, scriptures with my financial background. But, so I have a lot of different viewers. Not everybody's watching my videos now to the 12,000 subscribers, but, okay, financial update. I'm going to cover the financial markets and just with what I'm interested in talking about right now. So I'll go over it and throw my perspective on it, take it or leave it. Okay, gold, of course, is going to go to 2,000 and 3,000. Of course. Silver is going to hit 50, 60 bucks an ounce. So those are totally safe, continue to be safe investments. Wheat, I talked about, buying them out there when I was holding those buckets in front of Walmart. I'm in Prescott, Arizona right now. I was looking up some wheat prices with other people, but there'll be shortages of wheat 1 and 2 years ahead, so wheat will double and triple and quadruple, and 3 years from now, wheat will be 10 times. So you guys in the commodity pits, if you want to buy futures 2 years out on wheat, or calls on futures, options on futures, calls, I think it'd be huge. Huge. It's not easy to open an account nowadays with a wonderful Homeland Security stuff. You got to basically almost cut off your arm and give it to them to open an account. But or even reopen an account. But so finance guys, yeah, wheat's going to go way up. As far as betting on it, yeah, I'd give it a year frame. But there's going to be shortages, massive shortages of wheat and other foodstuffs. Well, Japan, of course, that's happening right now. So yeah, you can bet on wheat, you can bet on corn, any other basic staple grains. 2 years out will be massive wins. And I like options on futures because you limit your loss to the price of the option. And you have some tremendous upside, so you make 10, 20, 30 times your money. At least double, triple, quadruple if you're very conservative on your strike price and stuff like that. But I'd go a few months out at the riskiest, and maybe go a year, 18 months out, if you want to be sure you're going to cash in with a massive win. Okay, commodities. So that's commodities. Yeah, gold. Talked about that. So the bond market. What's going on with the stock market? Stock market's up. Well, I guess I get bored, what am I going to do? How am I going to explain, undergraduate degree in finance, reading the Wall Street Journal for 20 years while other people are watching football. I barely know who's going to be in the Super Bowl or, what's going on. I remember Dirk Nowitzki was walking around because they were going to play the Utah Jazz in Salt Lake City, and I'm like, wow, that's a nice college basketball player. And I told my son, Dad, that was Dirk Nowitzki. And then I tried to get a little more updated. I'd find out about the Mavericks and Cuba and all that stuff, but I had no clue who he was. So, as far as clues go, the market being up, hello, it already collapsed. It's collapsed in 2008. This is pure manipulation. Let's say, do you know about the desk? I think Goldman's running it, or one of those guys, JP Morgan or Goldman. But you got a desk of a few young bucks that monitor the bond price in New York City. I think it's New York. So, if you had a bunch of money and it's like, oh no, the 30-year bond hit 3.6%. Okay, we better make some purchases. How much you have at your disposal? Oh, a few $100 billion today. That's how are you supposed to predict the bond market when you have a team that's manipulating the market on a daily basis with sophisticated computers and plenty of money to do whatever they want to. So, if there was no interruption in the bond market, no manipulation in the 30-year bond market, then yeah, we'd be 8-9%. So as soon as that manipulation stops, then the 30-year bond will be 10%. So to me right now, lending the U.S. government money for 30 years at 3.6% last I looked is insanity. It's ridiculous and it's artificial. Okay, so that's bond. 10-year bond, same thing. That's why short. Well, the smart money's in short-term instruments, and the stupid money, what Bill Gross said, he got out of U.S. government securities, long-term, okay? He's got out of 10 years, I think, and on all the 30 years. PIMCO, largest freaking money manager on earth. He's also tied with the government. He's got good information. Better than my information. Bill Gross is out. So if you got common sense, you're out of bond funds. Hopefully you got out of muni bond funds before. But as far as the U.S. federal government lending the U.S. government money, you don't understand basic math. And sorry, I don't have time to explain it. I don't have interest to explain it. Do you think financial assets matter to somebody living in northern Japan right now? Do you think they're worried about their bond portfolio or their stock portfolio? They're worried about if their parents and their kids are buried in the mud or not. They're worried about nuclear meltdown of rods right this minute. Okay, so finance. So bond market, yeah, it's going to collapse. When? I think we'll see. It depends on the manipulation, so I'm going to give an educated guess because I'm not there at the desk with the billions to push the buttons and manipulate it. But I would say 2011, yeah, we'll be over 6% on the long bond. If they stop manipulating, we'll go to 8, 9, 10%. And then in 2012, we'll be well beyond 10% on the 30-year bond. Okay, 2012, by the end of 2012, well beyond 10% on the 30-year U.S. government bond. Short that how you will. You know, you want to pay me $5,000 or get my consulting, call me up and we'll make a deal. But I'm not going to give like super sophisticated financial advice on how to short the 30-year bond, when to do it, and good. Hopefully you'll make, 2, 3, 400%. But, I got other things going on besides giving free advice on YouTube as far as shorting the 30-year bond. I know I said I'd do it, so there it is. There's my take on it. Okay, I'm going to talk about Japan because that's like about 10,000 times more interesting to me right now. But so financial markets covered that. Oh, Newmont, 50. It's crazy because I remember a guy in Barron's, I was reading Barron's like 4 years ago, and he says, if gold is sustained over 800 an ounce for, a month or a few months, Newmont will be $80 a share. Well, that guy was completely out to lunch. I haven't seen Newmont into the 70s. And I saw like 52. It's like, what's going on? So if you're investing in an individual equity stock, they could get reamed by the SEC, by tax consequences, whatever. So you might do ETFs or the physical metal, whatever. So what? U.S. stock market? It's manipulated. When they stop manipulating it and they realize how horrifying this economy is and trillions aren't thrown on it, downward. It's a question of when. Okay, I'm exercising. That's my financial thing for you finance guys. I'm not mad at you, but I'm just like, I've lost interest because other things are like about 1,000 times more important now, okay? It's already crashed. It's manipulated. Duh. Just the way it is. Okay? Ciao.